Hey guys, so you want an offer in compromise, settle the debt, pennies on the dollar. Does that actually work? I've been doing this for 25 years. Now, I get 93% of my offers accepted. Now, I tell you that for three reasons. One, brag. Two, look, I teach this stuff, for a living. I do this every day in my office. I like to think I know what I'm doing and talking about. But three, notice I said 93%, not 100. So what goes wrong? What should you be thinking about if you want an offer in compromise to settle the debt with the IRS? What should you be thinking about if you're a tax professional trying to help your clients settle their debt with the IRS? The number one reason, the number one reason why offers fail has nothing to do with the amount offered, has nothing to do with maybe the returns or whatever. Tax compliance. Tax compliance will kill an offer before you can even say, hey, wait a minute. All right. So, what is tax compliance? Tax compliance, to be a compliant taxpayer, you have filed your returns and you're paying your current taxes. All right. Now, I don't tend to do a lot of PowerPoint slides with you guys, but what I want to do, all right, is show this to you. So, I did put together a few slides. Let me go ahead and share my screen with you. All right. So, everybody, let's talk about tax compliance. Now, I'm letting you in on this secret because, well, frankly, the way I feel about you. Tax compliance means you file the returns that are due and owing, and you're paying your current year's taxes. So, what if you're somebody who hasn't filed a return in 10 years? Do you have to go back and file 10 years of returns? No. According to the Internal Revenue Manual, and I gave you the site there, 1.2.1.6.18, it's policy statement 5-133 for those of you interested, defines compliance as the last 6 years. So I'm recording this at the end of March 2025. Your client could be in compliance if they file 19 through 24. Now, they could file more returns if they want to, but they don't have to. All right. Why would you want to? I'll get into that in a moment. So if they have the last 6 years of returns on file, all right, and they've made their current payment. So if you're an employee, you're having enough withholding done so you will not owe a balance at the end of the year. If you're self-employed, you've made the current year's estimated tax payments. And or if you're a business, and let's say it's a payroll tax issue, you've made the current quarter and the last quarter's payroll tax deposits. Right? If you can check both those boxes, you are in compliance. You must be in compliance to even be considered for an offer in compromise. Okay. If you are not in compliance, you're not getting an offer. Your offer, when you file it with the centralized offer unit, is simply going to return it. Right? The way to think about this, the offer and compromise unit does not want your offer. I know that sounds a little weird, but it's the truth. They're trying to figure out a way to get rid of your offer. Honestly, if they can come up with a way to get rid of it, they're going to. Okay. Now, what if the government has done a substitute for return? Now, if you don't know what that is, the IRS generally will send a letter saying, hey, we'd like you to file your return. If the taxpayer doesn't file it, they have two options. One, if they have enough third-party information, 1099s, W-2s, they can put together a return for the taxpayer called the substitute for return. These are usually overstated, right? Because they don't have any of your deductions, your itemized deductions. So they just take your income and generate a return, hit you for the penalty and the interest, and mail you a bill. Do you have to get the actual return filed? You don't have to. I know that there's an urban myth, especially among accountants. Well, you got to get the actual returns filed. No, you don't. Under Code Section 6020, a substitute for return is a tax return for all purposes. The government, it starts the 10-year collection statute. They can file a notice of lien based on it. They can levy based on it. Your client can get into a payment plan on it. They can just pay it. You can file an offer and compromise on it. You don't have to correct it. Now, you might want to, again, because it's so overstated. Now, how do you correct a substitute for return? You have to file the original return, not an amended return. All right. As a taxpayer, you cannot amend what you didn't file. The substitute for return does not get amended. You file the actual original signed return to get that corrected. Okay. So if the way that this breaks down for me, let's assume we have a bad assessment and it's overstated. If I'm going to do an offer and compromise, I'm probably not going to bother fixing the return. Why bother? We're going to do a compromise anyway. But if my client's in a position where they're going to have to full pay the liability, well, then by all means, I want to hurry up and get an original return in and try to reduce the amount owed, the penalty, the interest, and everything else, save my client some money. So whether I'm going to correct the substitute for return or not is going to be dependent on what my solution is going to be. Now, when it comes to estimated payments or tax withholding, let's assume the client comes to me in October and I say to them, okay, you know what? I see the back balance and all that. Have you made your estimated payments for 2025, the current year? They will often say one of two things. Either A, what's an estimated tax payment? Or B, well, no, but that's not due till next year. Who cares about that? We have to be in compliance. So we need to catch up. So if it's an employee, we can actually increase the withholding because we're going to need the proof of that for the offer unit. But if it's someone self-employed, can we make up the missed estimated tax payments? Absolutely. So let's assume for purposes of our discussion, I have a client that owes $10,000 a year. They should be making $2,500 estimated quarterly payments. I would have the client now, remember it's October of the year, so they should have made April, June, and September. So we've missed 3 estimated payments. I would have them make 3 payments of $2,500 each. Why? Why not just make one $7,500 payment? Let's talk about the centralized offer unit. Remember the one that wants to get rid of your offer? When they get the offer, they're going to log in and there are going to be a few things that they're going to look for immediately. Okay. They're going to look to see, is your client in compliance? If they see one estimated payment of $7,500, remember, they want to get rid of your offer. So you know what they're thinking? Oh, they're not in compliance. They should have made 3 payments. They only made 1. Return. And when they return the offer, there's no appeal, and they're going to keep the money your client sent in. Right? Your client generally has to send in 20% of the amount offered if they're doing a lump sum offer, and the $205 application fee. So that money they're going to keep, and they're going to return the offer. Your client, I can assure you, will be really unhappy if that happens. So what I have the client do is make 3 $2,500 payments. Yeah, they're all being made the same day. I don't care. If the client's not sure what to do through direct pay, we'll have them come to the office or I'll get them on Zoom and I will walk them through it. All right. Because what I want is, again, that the centralized unit, let's think through, they log in, they get the client's offer, they log in. What do they see? 3 payments, $2,500 each. Okay, 3 payments are made. Now they can open the package and look at it and whatnot. So one, they're going to look to see, is your client in compliance? The other thing is they're going to confirm whether or not a notice of federal tax lien has been filed. If it hasn't, they're going to make sure it gets filed. So you might have a client who tells you, or I have clients who tell me, can we hurry up and do the offer before they file the lien? No. Because even if we do, the offer unit's going to make sure the notice of lien gets filed. In fact, clients get very upset about that. We filed an offer. Why are they filing the notice of lien? Because they know. They know that clients sometimes play games. They file the offer and they're distracting. Collection's not looking at them. And then they start transferring away their assets. Not going to work. So they're going to make sure the notice of federal tax lien gets filed, right? The other thing, as a caveat, in order to do an offer and compromise, This is why the upfront analysis is so important. Back in 2012, when the Fresh Start Initiative was done, yes, the Fresh Start Initiative was back in 2012. It is long gone. What it was a bunch of changes, excuse me, that were made to the program, making it a lot easier to get an offer. One of the things they changed, though, is your client, the taxpayer, cannot show an ability to full pay within the time remaining on the collection statute. So that's why we do this upfront analysis. If you call one of those 800 number national companies and they say, oh, yeah, we can save you some money, how do they know? I mean, I'm being honest. How do they know? Without doing the RCP analysis, how do they know? I'll give you an example. Let's say you owe 100,000 and you make $70,000 a year. You might say, Eric, can I do an offer? I don't know. How much time remains on the statute? 10 years or only 5? I mean, are you single or do you married with 3 kids? Do you have major medical expenses or are you in good health? Do you own a house or are you renting an apartment? All these things are major factors. You have to do the RCP analysis. So if you're a taxpayer listening to this, don't get suckered by those national companies that are like, oh yeah, call us and we'll settle for less. They have no idea if they can do it or not. They just want your money. All right. You need to work with a professional that will do the analysis with you. And then they should be able to walk you through what your options are and why. For instance, there may be some strategy to this. I'll give you an example. Let's assume you just filed the last 6 years of returns. You owe $100,000. All right. We do the RCP analysis and you show an ability to make payments of $1,000 a month based on the allowable standards and all the other things that we do. You can't do an offer. $1,000 a month, it's $12,000 a year, 10 years remaining on the statute because you just filed the returns, $120,000, you only owe $100, you have to get into a full pay installment agreement. But I happen to notice, okay, your federal student loans are in abeyance. Well, what if we start paying those? If the loan is for your education, it's got to be for the taxpayer, not their kids, but for them. That's an allowable expense. Okay. I noticed you don't have any health insurance. Why don't you have health insurance? Well, money got tight. I dropped it. No, you're entitled to health insurance. Go on the exchange while we still have them and get health insurance. So can we, have you start paying your student loans? Let's say that's $400 a month. Well, now you don't have $1,000 a month to pay. You only have 600. 600 times 12 months is 7,200. 10 years is 72,000. Now you can't full pay. Now you're an offer candidate. So that RCP analysis, reasonable collection potential, it's that financial analysis the government does, which is how they determine whether you can do an offer and how much they would accept. Doing that upfront is critical. One, confirm that you cannot full pay, or if there's some strategy to make sure you're an offer candidate, make sure you're in compliance, and if not, help you get into compliance, all right, and help you get this resolved. So what I'm hoping here is you learned a little something, why tax compliance, first of all, what it is and why it's so critical, okay? Because the offer and compromise program with the IRS absolutely works. You just have to qualify, all right? And the biggest killer are folks that want to hurry up and get an offer done, and they haven't filed all the returns, they haven't made their current payments, and they're wasting a lot of time and effort. It's really important that you check all the boxes to give your offer the best chance of success. That's why we do that upfront consultation. It's why we do the analysis, and why you should avoid anyone that guarantees that they can help you without doing that analysis, because they don't know. They're guessing. Mostly, they just want your money. So with that, I hope you found this helpful. I hope you learned a little something. And if you're a tax pro, you should be helping taxpayers. Come check out Tax Rep Network. We'd love to help train you and help you launch your practice. If you're a taxpayer and you need someone to help you, reach out to us. I can put you in touch with someone who I can guarantee you knows what they're doing and can help you.